Hello everyone! Nobody likes paying for insurance, but we all need it because, let's face it, accidents happen. I'd like to demonstrate why insurance can be very useful. Hello everyone and welcome to Finance Wisdom. In this video, we're going to talk about how does life insurance work. Detailed video, explain. If you're new to this channel, do like and subscribe to the channel. Okay, so the likelihood that you won't be involved in a vehicle accident if you get in your car right now and go to the store is high. Alright, statistics support this. Even though millions of Americans drive their cars every day, your chances of getting into an accident are less than a minuscule percentage. Everyone is aware that having auto insurance is crucial since you never want to find yourself in a scenario where you get into a collision without it. Despite the very low likelihood that you will, you should never find yourself in a situation where your life is at risk without life insurance to safeguard your family. But how does life insurance work? Life insurance may be compared to a safety net or insurance that would provide financial security for your family in the event of your untimely death. I'm aware that this is not a subject that is very enjoyable, but it is preferable to be well prepared and to have a strategy. Let's imagine you and your spouse earn $50,000 a year and are married with a few children. Although you have some investments and savings set away, your family would face financial difficulties if you and your spouse lost your job or your source of income. The good news is that if you lose your job, you can at least look for a new one and hopefully find one soon. However, if you were killed tragically while strolling down the street after tragically falling into a giant pothole, your family has now lost another source of income forever. Not to mention that your family may need to take time out of work to cope with this loss, deal with funeral expenses, and pay off any debts you might have accrued. Even while these unplanned events are difficult to handle emotionally, if you aren't financially prepared right now, the situation has just become worse. Even though your husband was employed in this particular instance, many American homes only have one primary wage earner. If you were to suddenly die right now, your family would be in an even worse financial situation. If you buy life insurance now, you may keep your family from going bankrupt or living in poverty if something like this happens. The term life insurance accurately describes what it is. It is life insurance in case you pass away. Your life insurance provider will show up and hand your family a sizable check for $1 million, or whatever amount you settle upon while you are still living. Your family won't have to worry about the financial burden of losing your salary because of life insurance. You might thus consider life insurance as protection against the loss of a source of income for your family. However, here is where things get complicated. Since not all life insurance is created equal, and this can have an impact on how much you must pay for your life insurance. Being wise with your money is what we're all about here at Finance Wisdom. That entails living within your means, setting aside money for a rainy day, and making investments to increase your wealth. Building up your assets to the point that you can live off of their earnings and interest should everyone's financial objective, in my opinion. This eliminates the need for you to commute to a job in order to support yourself financially. Your investments will look after you. Insurance salespeople hate it when I tell you this. But once you reach that stage, you no longer need life insurance since your assets are providing you with enough income to live comfortably. You don't need life insurance since if you were to pass away suddenly, your family would simply inherit your investments and be able to live off of them or sell them if necessary. If that's your financial objective, you should choose a life insurance policy keeping that in mind. So you may get life insurance for a certain period of time. Therefore, if you had life insurance for 30 or 40 years, your family would receive a sizable payout in the event that you passed away within that time frame. If you don't pass away in those 30 or 40 years, you won't leave anything to your family. Therefore, term life insurance functions somewhat similarly to auto insurance in that it pays out if you are involved in an accident. You won't get a payout from your insurance company if you don't get into an automobile accident. You get a check if you pass away within the period. Keep in mind your financial objective if you don't pass away during the term since your family won't get a payout. You may use the term life insurance to create that long-term wealth by making investments with a term life policy. Your intention should not be to make your family financially dependent on your life insurance coverage. The second kind of life insurance is whole life insurance, which takes me to my next point. Because of whole life insurance, whether you are 35 or 105 years old when you pass away, your family will always get a sizable payout. If you're sure to get a payment, why would anybody not want full life insurance? You could ask. The guaranteed income does, however, come with a substantial fee that you must pay each and every month for the rest of your life. There are two factors that make whole life insurance so much more costly than term life insurance. You first request your life insurance provider to manage your investments. They are not functioning as an insurance provider to safeguard you against the worst case scenario. They have to include this additional expense in your monthly payment since you asked them to guarantee a sizable payout after you pass away. Second, cash value is a feature of whole life insurance that lets you use your life insurance policy to invest your money. If you like this video, don't forget to like and subscribe to the channel. Let's continue to discuss how does life insurance work. Now let's assume that your complete life insurance coverage costs $1,000 per month. A portion of the proceeds will be used for your death benefit. Your family will get this sum of money upon your passing. Your death benefit, if you were to get term life insurance, would be around $100. But let's assume that $100 of the $1,000 is going toward the death benefit in order to keep things simple. Therefore, the remaining $900 will be applied to that monetary value. Keep watching because it's not as easy as you would assume to construct this savings and investing account with your life insurance policy. This cash value part is stored and managed by your insurance provider and functions as a savings or investment account. You might think, oh, so I'm building equity in the insurance company and I'm building assets by paying into this whole life insurance policy. But there is a catch for the first 3 years of your life insurance policy. This is because the cash value portion of whole life insurance is what everyone likes to glorify because you can grow, invest, and save your money tax-free. Almost none of the $900 you are paying for the cash value goes into your personal savings or investing account. Your insurance provider receives that money outright, and the commission paid to your insurance salesman also benefits directly from it. Consumer Reports estimates that if the cash value begins to accumulate over time, it will increase by an average of 1.5% annually. As a result, your money isn't really accomplishing anything, and spending the cash value money isn't very advantageous either. You could terminate your life insurance policy and get your cash value back, but it would be counterproductive. Currently, you may take a loan against your life insurance payout. To utilize your own money, you must pay interest to your life insurance provider. Or you may just wait until you pass away. When this happens, the cash value component goes to the life insurance provider rather than your family since, as we said before, there is a death benefit. Your family receives it, you are paying $900 each month, which won't be given to your loved ones after your passing. Therefore, term life insurance is usually a much better choice for those who are investing their own money. Life insurance provides you with the necessary financial security for as long as you choose. You can buy a term plan for 20, 30, or 40 years, and during that time, you'll still have extra money because you won't be paying it all into a whole life insurance account. With this extra money, you can invest, and if you put it in a low-cost index fund, you might do much better than the 1.5% return on investment. Additionally, you are in total control of your finances. Here's one more recommendation that goes beyond the kind of life insurance policy you choose. Your age when you get a life insurance policy is the second important factor that will determine how much it will cost. You should lock in the reduced rate while you're young, since life insurance costs decrease the younger you are. Now that you and your family are protected, you may stop paying for your life insurance since you no longer need it after you have amassed the riches you're searching for. You are prosperous. When it comes to the amount of a life insurance policy, you usually want something that is at least 10 to 15 times your yearly pay. So if you make $60,000 a year, you should normally get a policy that is at least $60,000. You may use life insurance in order to financially shield your family from adversity. Simply make sure you're utilizing it properly and that you're protecting your family's finances, not those insurance provider. For significant peace of mind, it's a tiny thing to pay. We've reached the end of another video and thank you for watching. I hope you have learned how does life insurance work. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.